and it went live, and it even found mention in Alphabet's earning call, where Sundar Pichai called out Setu for doing this work with Google. So that was a very proud moment for us.
Pause here. The
We
audience
also work with
no
Setu.
idea.
Very proud.
Tell
very
us in
proud.
great detail that little bit again. We need to hear this bit. Sahil, on behalf of Gaurav and myself, welcome to our show. You're zooming in from Bangalore today, right?
I am zooming in from my office in Bangalore, and thank you so much, Ronit and Gaurav, for having me on this. Looking forward.
The pleasure is all ours. The pleasure is all ours. Hopefully, the next 25 minutes or so in rapid fire, we're going to unpack the story of who is Sahil, what is Setu, and what does this all mean for the greater, bigger world of fintech, and fintech, not just in India, but fintech around the world. Sahil, I want to start with the founder story, because one of the things, this is the series about Fintech Founders. Tell us about that moment you said, the eureka moment, that I need to do this. I need to set this company up, because I've read the biography. I was listening to a podcast with you on the treadmill this morning. There was a fatherhood and founderhood kind of combination, symbiosis, right? Tell us about that.
No, for sure. I mean, I think it's important for me to go a little bit further back and tell you where I'm from. I'm from a town called Mangalore. It's a coastal town, very pretty, great standard of living, great seafood if you guys haven't had it. My dad was a founder, as in he's a businessman. He started his company when he was 15 years old with nothing, and he built everything. I mean, we have a paint manufacturing business in Mangalore. My grandfather was also an entrepreneur. So he started a rubber stamp company, a driving school, and a bunch of other businesses. He had 11 children, so he had plenty of sons to start businesses with. And my great grandfather was also a businessman. So I mean, entrepreneurship kind of runs in the blood in the sense, in some sense. I wanted to be a businessman before the word entrepreneur was there. I wanted to be a businessman since I think when I was 2.5 years old. I remember pointing to a factory, the largest factory en route to my dad's factory, and saying, someday I'll build a factory bigger than that. Right. So and I've always wanted to be that. I've never wanted to be an astronaut, a cop, or this thing, none of that. I've always wanted to be a businessman, because and so it's always been the default in a sense. So I had started my career in McKinsey, and then after that I ended up at Dhar, which was like a wonderful twist of fate. And then it really, I think a lot of the work that I do at Setu today is, it finds its origin story in that 1 year that I spent in the first year of Aadhaar. And then after that, I had started a company. So this is not my first rodeo. I started once and failed. When I was in 2013, I started an industrial IoT company. Talk about being too early. And being early is being wrong, right? So I had to shut that down. And that time I couldn't raise any capital. I put my own money. I went broke. I had 14,200 rupees left in my bank account by the time I had shut it down. I was getting married in 5 months. So it was, so I've been through that. I've ripped the name board of my own company off the wall, and wept for its death, so to speak. So been through all that, and then I became a VC immediately after my startup died. So I don't know what that says about anything, but that was fun. But the main reason I
you know what they say, those who can do and those who can't teach, or VC in this case.
Best, yeah, exactly. So it's a little bit of that. But honestly, I joined VC because back then, and I don't know if you guys hung around the VC ecosystem back then in India, but back then the VCs were mostly suits, in the sense that
IIT converts.
Exactly. IIT, IIM, McKinsey /BCG /Bain, then somewhere, then this thing. None of them had ever run a company. I mean, look, and I'm from that Jat, right? I'm from that lineage. I went to IIT, then went to McKinsey.
We won't hold it against you.
Thank you.
Too late. I've judged him. I've judged him already.
Yeah, you should.
IIT and McKinsey, we should stop this podcast now, right, Gaurav?
I know.
We just
I
shut
think
it down, yeah.
we just don't need to promote him anymore. I mean, it's just
No.
crazy. Old boys club, please. Thank you very
Yeah,
much.
it's all clubs. I think club is the absolute right word. I mean, we
Yeah.
get very privileged to get selected into some clubs, and then there are privileges of those clubs that are lifelong, right? In a sense. Anyway, couldn't raise capital, all of that. And all the people I'd met that time, they all had very strong views on where the market is going to be and what the growth rate is and what LTV to CAC should be and hoo-ha and all of that. But not one of them had actually run a company and knew how lonely it was, how painful it was. So not one of them ever asked, so how are you doing? You okay? Like, and most founders won't give you an honest answer. Everyone will say, yes, everything is fantastic and all of that. But every founder is going through some kind of private hell. It doesn't matter if you are a multi-billion-dollar company or if you're a seed stage company hunting for capital. It is lonely and it's a struggle. And you need people, particularly on the investment side, you need people who can empathize. So I decided to become a VC for that reason. And I enjoyed it. I really loved it. But at 4 years into the gig, I became a dad, which comes to the fatherhood part. And then at that point, it became, since I'd always wanted to be a founder, I always wanted to be a businessman. It's one of those, like, how do you tell your son to chase his dreams and do what his heart tells him to do if I'm not leading by example? And so, when the boy was born, I was like, I got to do this. It's a really bad idea. I don't recommend this to anybody. It's terrible. With a 3-month-old company and a 4-month-old kid, it's a bad idea. Don't do it.
You still got hair on your head.
I still got hair, and my wife hasn't left me yet. Those are my significant achievements so far. But it came from that, that irrational founder place in a founder's heart. It came from that, saying, okay, this is started, I've got to start this as well. So I confess, maybe I could have taken a few months, enjoyed my boys, babyhood, and then maybe started. But it felt imperative. It felt urgent that I do it.
You felt the urge. You felt the imperative. This is it. I have to do it.
Blood. It's like 5th generation entrepreneur. You had no choice.
It was bubbling to the surface.
Yeah.
But why fintech? I mean, you've said before that every company becomes a fintech company or it's an unborn fintech. Why did you and your co-founder Nikhil decide to set up a fintech company?
I think it was a combination of things, right? One was the fact that in the preceding 4 years, when I was at the VC firm, at that point, my area of specialization was financial services and fintech. So I was investing in NBFCs, on the board of a couple of fintechs, all of that. And the other thing that I was spending about 20 to 25% of my time on when I was a VC was as a part of the core team of India Stack. So working on UPI, GST, account aggregator, all of the stuff that we kind of have today.
So you saw the future.
Yeah, I mean, I was part of kind of the idea. Yeah, the very initial stages of building these public digital platforms. I was a small volunteer, a small part of the team that worked on it. But you could see something special happening and something special shifting. And I had domain expertise because not expertise, but at least domain exposure. Sure, because of being on these boards and spending time evaluating all these companies. And it also lined up. See, for me, really, in my house, there are only 2 photographs of non-family photographs, right? One is, which are framed and put up, all that. One is of my great-grandfather, Sahil Kini, who started that coffee business. And the other one is of Sir M. Vishweswaraya. I don't know if you know that name, but Sir M. Vishweswaraya is India's, like one of those engineers that built India. Right, he built the Krishnaraj Sagar Dam. He built Mysore Sandal soap. He built lots and lots. I mean, half of Mysore is all him. He was the man, and he used to sit up on my study table. I think my father had kind of placed it very strategically on there. And at my convocation in IIT, the gentleman who was there, or chief guest, was E. Sridharan, the gentleman who built the metro, the Delhi metro and the Kochi metro. And the boss that I looked up to the most in my period was Nandan Nilekani. Again, someone who built infrastructure, right? UIDAI. So the people that I looked up to the most, and kind of whose work I felt was most meaningful, were people who built infrastructure for India. Tens of millions of people use every single day, and their life is a little bit better. And it's not like you thank Nandan Nilekani every time you do an Aadhaar OTP, or that you think of Mr. Sridharan when you buy a metro ticket, or every
You're
time
going to inspire a series of stamps right now. It's going to happen.
Hey, it should. Those gentlemen deserve it. But the satisfaction of having built something, because I fundamentally believe that it's incumbent on the best of us to build for the rest of us. And so I feel a very deep sense of responsibility that, I've been educated on taxpayers' money. And I've had the, privilege of working on these large-scale public digital platform products. And so it felt like an obligation to build something on top of this that will have an impact on those of us who need it the most, at least in India to begin with. So combination of domain exposure, of experience building some of these this thing, and like a mission alignment, all meant that this is the area that we would end up focusing on. It's kind of inevitable in retrospect.
I want to dig a bit more into the UPI side of this and also the API side of it, but I'm going to hand over to my partner in crime, Gaurav, and his dodgy Mercator projection map, because he claims to be a fintech something as well. So he should be maybe taking over the questions here, Gaurav.
We all claim to be fintech somethings. I love
he
that.
Is. He's like, he's like a big
something.
fintech mover shaker. So from one fintech guy to another, Gaurav, take over the questions.
Thanks, Ronit. I mean, unfortunately, I had no choice, right? My father started a fintech company 1 year before I was born. So there you go. So I start my presentations with a picture of me in a diaper saying this is the fintech second generation entrepreneur. I had no choice. So they, just like you, Sahil, in a different sense.
Awesome.
I'm glad you're properly dressed today, Gaurav.
Thank God. So listen, fantastic story. It's really good. And I mean, you're part of the infrastructure when it was just starting, and that's an amazing piece and movement to happen. Everyone knows or is inspired by the UPI story in India. I mean, I believe there was a letter that went out from Google in India to the United States government and other infrastructure players saying, please, can we have UPI for the United States? Because this makes so much sense to help the ecosystem and the businesses within it grow. Because, to your statement, everyone's a fintech, or everyone's using fintech. So it's both sides of a very sticky coin, right? So that's very interesting. But in retrospect, looking at your journey, I'm curious, what would it look like if in a sort of dystopian kind of scenario, if we didn't have UPI? Where would Setu, what approach would you take to having Setu navigate in the market and set up your own kind of infrastructure? Do you think you'd be able to maintain it at the same pace with the fintech hype and the funding and the building and the aggressiveness? Or do you think it just would be completely different today? I mean, from an ecosystem perspective, I'm curious.
That's a good question. And honestly, I pondered when you told me that this is one of the things that's on your mind. And first thing that came to mind, which tells you, how I think about business, is, damn, the margins would have been a lot better.
That was the next question, but never mind.
I mean, those BIPS-based pricing was so sweet MDR. But no, but honestly, I think you wouldn't have had this kind of Cambrian explosion of, like the extent of digitization. And you see the number of transactions that are happening now, like close to 4 billion transactions. It's just like wildly outstripping everything that is there in terms of,
wow.
So I do think that it has exploded the market, though the business margins have shrunk significantly. So it's like razor's edge kind of business in payments right now. But I think what will happen is, because of this, there are secondary knock-on effects on credit, because more transactions you do, the more you can do flow-based lending, because it's transaction data and so on and so forth. So
Right.
I do think that what you lose in margins here in payments, I think you might end up gaining in terms of market size for people who can be successfully underwritten, because they've increasingly started transacting in this offline manner. So while I think if UPI wasn't there, a lot of our businesses would, the payments businesses would be a lot harder, in the sense they would be harder to kind of scale, because they would have to be MDR and all of that. So that there would be that. And the lending businesses, I think initially will remain unchanged. But I think if you're looking at a 3-5 year horizon of how many people can be profitably served and underwritten when they're new to credit, the transaction volume, the transaction data volume would have been significantly smaller, which means that a lower percentage of the population would have been successfully underwritten. So I think it has expanded the market. I think it has come at a cost, but I think the benefits in the long run will outweigh the cost that we've had to pay in terms of margin structure erosion right now.
And just on that theme, right, of market expansion, rate of expansion, it neatly fits into the next question, right, which is competition, or just market dynamics of the people who are operating in the same space of a service provision, API provision that you're doing, right, from a fundamental platform connectivity layer. At the same time, while UPI allows people like you to expand at a certain rate, right, much faster in connectivity and providing different layers and services, right, different streams, it allows your competition to do the same, right? And at some point, the market is going to stagnate and people will be able to come up and offer exactly parity or close to parity of what you're doing, albeit maybe in a different sort of way, very close to it, right, for people to be interested. What happens to a business like Setu, or from your thought process, from a founder that's constantly trying to create, right? When you reach this plateau, what do you think is the next evolution for you to grow or to sustain your business in those scenarios?
So I'm not sure I completely agree that it'll end up in like a parity of that everyone will be able to offer the same thing, because a lot of this is also, in a sense, a network business. When you're kind of, so one of the things that we do is we interface with financial institutions and we say, okay, you want to grow your business. Branch banking is a channel to grow your business. Mobile banking is a channel to grow your business. Now,
Right.
this API banking or embedded finance, call it what you will, is also a channel for you to grow your business. So how do you embed your products seamlessly into third-party applications so that you can originate business from there?
Right.
Now, for large, like, super large partnerships, the bank might say, or the FI might say, I want to do a direct integration because those guys are squeezing me on margins anyway. I don't want another layer in between where I have to pay, etc. And I'll pay the coordination and development cost and all of that with my internal IT team so that I can do that. But I think what we've seen is pretty much every large financial institution and even smaller ones are like, dude, we have more demand for digital partnerships than we know what to do with. We can't service it because a partnership is a complex dance, which is not just purely technical, right? So there is a technical integration aspect, and everyone keeps asking me the question, oh, is the legacy architecture of this bank very different from that? Is it this? Tech is deterministic, Gaurav, and once you know the requirements, you can build it, right? The rest of the stuff, which is audit, infosec, compliance, legal, business agreements, all of this stuff requires and they're all different divisions within banks, right? So getting them all to align and getting them all to sing the same tune together is a lot of that has to come together, and that's the real superpower.
So despite UPI being a leveler, essentially, there's
UPI
still so many layers to cater to that it's
Yeah.
still
I mean, to do credit, to do deposits. I mean, UPI is just one part of the payments leg, right? I mean, there's so many other. You have to you open accounts on the core banking system or the LMS, or and create the customer identification criteria. All of that stuff. Opening those accounts is very different from just the funding leg of a transaction. So there's much more beyond just UPI, and building that deep integration with these financial institutions. So that when new partners come, they're like, okay, you don't have to work with our IT team or something, just work with our API partner Setu, and the integration is done. right? So that way, once they have one large kind of aggregator of sorts, a middleware layer that can work with multiple partners on the demand side for them, I don't necessarily see that bank running to say, I want another layer like that. The whole point is to kind of minimize the overhead in that sense. So across the board, we're, what we're seeing is once you kind of get good supply, the chance of parity is lower because, the additional cost of the switching cost is fairly sticky offerings in some sense. So I see this as building that network in a sense, like another payments network can come and say, why don't you integrate, etc. But Visa and MasterCard will still have dominance, right? In a sense. So I think it'll end up more like that.
Okay. Yeah, it's definitely something worth looking at. I think, Ronit, I'm going to hand over to you before we get into Q&A.
For people, Sahil, let's just zoom out a bit because some of the audience may not know exactly, the India ecosystem. I was saying, what is the, for people who don't know Setu and don't know the India ecosystem, what does it look like? What are the services you provide if you don't know Setu? Just very very plainly explain that. And what does it look like in 3 or 5 years' time? Just kind of piggybacking a bit of Gaurav's comments about, the world with UPI, etc.
So we offer, look at it this way, right? Our job is to enable, our mission is to enable banking and financial services to reach as many people as possible. 500 million Indians is the goal that we put, right? Now, we believe that the only way to actually get there is to enable banking and financial products to be serviced and acquire customers from nearly any application. So making it embedded and omnipresent is what is required. Now, the bank or the financial institution or the insurance company is a behemoth. They have lots of products and they have all kinds of different offerings. So you've got to really break it up, unbundle it into its constituent components. And the logical components are payments, so transaction banking infrastructure, so to speak, data, which is also a part of transaction banking, but I think it makes sense to now call it out separately. So payments, data, and essentially accounts. So accounts could be assets, liabilities, insurance, any of those kind of accounts. Now, we have APIs across this entire spectrum. So we built APIs for payments where you have a UPI stack. We have Bharat Bill payment system. So if you want to be a biller on this interoperable payments network, you can get on it. We have FASTag API issuing, which is also a payments instrument in some sense. FASTag is the toll gate, the automatic toll gate tag for vehicles. And so those are our offerings in payments. And we will expand those offerings probably to include payouts and some of the other infra as well. So your wholesale banking kind of infra, right? So that's on one, on transaction banking. Then there is data. In data, what you're looking at is any single data check that is required for you. What are the 3 grand problems in financial services? Onboarding, underwriting, collections. Really, those are the 3 big problems. So when you're doing onboarding, everything that's required for KYC, for bank account verification, for other ID verification, account aggregator data, so getting transaction data from bank accounts. These are all APIs that we have, and they typically, we actually dog food them to all our accounts businesses. So when we open a fixed deposit, so these are all the data APIs. We can sell them independently, or they can be used as a part of the account opening process, account opening journey, which is where we've built a bunch of other products. So one is a fixed deposits product where you can book a standalone FD with a bank without having to open a savings account with that bank from a third-party application. So this is something that we've done with Equitas Small Finance Bank in partnership with Google Pay, and it went live, and it even found mention in Alphabet's earning call where Sundar Pichai called out Setu for doing this work with Google. So that was a very proud moment for us.
Pause here. The
we
audience
also work with
no
Setu.
idea.
Very proud.
Tell us in great detail that little bit again. We need to hear this bit. So Sundar actually called you out on an earnings call.
Yes. It was one of those moments where I woke up a bit groggy because it was a long night the previous night, and then someone sends me a message saying, "Is this you?" And I'm like, "Is what you?" I'm seeing Alphabet's earnings call, and in the last 2 minutes they talk about what are the new things Google Pay is doing all over the world.
Yeah.
And I said, we're always innovating on that front. And Google has basically, we've built a fixed term deposit product, and we've launched that on Google Pay. And we've done that in partnership with an API company called Setu. And I'm like, wait, you just mentioned us? So that was a very exciting moment to see the world's second or third largest company call out a little startup in Bangalore, saying
Best time to go fundraising. Best time ever.
No comment.
I thought, Sahil, you had enough money now and you were just looking for the the long-term vision. And
no, look, I think it's very important that we build a capital efficient business, and and our like 80% of our cost is our people. The balance of that, the 80% is AWS costs. You're welcome, Jeff. And the rest is incidentals. But I think so we don't need marketing budgets or any such. We don't do cashbacks. We're not in that business. But I think it's important. I mean, it's very important to me and the team to build an organization which has very high talent density. And the most fulfilling periods of my life have been when I've worked with people who are smarter than me, who are more driven than me, and who inspire me by simply being themselves. And I was lucky enough to be in environments like that in, say, IIT or McKinsey or even at Dhar and a few other places. And I've always wanted to replicate that. I'm very driven by, I'm very enamored by the concept of a fellowship or a roundtable. Because I don't have the hubris that I can do it alone. I think I need people who are much smarter than me. And so at the same time, money is not about the money. For smart people, it's about feeling valued. And given the liquidity in the market today and where funding has gone and all of that, there definitely has been a correction in terms of compensation for startups. So I really ideally, want to be a place where we have plenty of capital and a sustainable business so that we can just, money is not one of those things that I want to worry about here and what I'm paying my people. And compensation should not be a worry. So only for that, if for that, I might do a capital raise to say, this is, nobody's got to sit and worry about their standard of life when they're trying to change the world, just.
Fair enough.
Just add cryptocurrency to something, Sahil, and you can raise it 2x of whatever you're going to raise at some point.
Yeah, I mean, I guess I could do that. I guess.
I don't think you have a choice anymore. The metaverse is here. But that's a different conversation, I think, right?
That's I think we'll save the metaverse till like maybe next year or something. We get Sahil back and we can talk about the metaverse next year.
While
and then he can mention it in his earnings calls.
While an egg sunny side up NFT might be worth quite a bit, it sure won't fill your tummy. So at the end of the day, you still have to come to the real universe.
It is if you sell it.
That's right.
That is true. That is true. Yeah. Yeah, you're just one sale away from going from fake to real. We'd love to chat more with you, Sahil, but we've used up our half an hour of time we'd allocated to this. We had a lot of fun there, talking about the founding story, fatherhood and founderhood, the fellowship of smart people doing smart things, building around UPI, making money, hopefully even with zero MDRs.
Oh, we'll figure that out. Like I said, my father would be very disappointed if I let red sit in the balance sheet for too long. So,
which year have you promised your father you're going to go black from red, or is that a cheeky question?
I'm very careful about making promises to my father. So all I've said is someday.
Someday, inshallah, someday. On that
break a leg.
Thank you so much. Really appreciate it.
It was a real pleasure. Thank you.
This has been fun. Thanks.
Bye-bye.